What's going on, everybody? Today I'm going to be talking about how I lost $100,000 this week. No, I'm just kidding. I didn't actually lose 100,000. I'm not a DGen, but I am going to be talking about how I actually lost money in the market today. Even though I was completely right about everything, I know where the market is going every single day, but sometimes I'm not going to navigate them to perfection and life gets in the way. So I'm going to drop this clip in here and show you guys, just so you don't take my word for it. Here's a clip of me talking about this live time and walking everybody through why I was knowing that we're eventually going to reach this time base high. So yeah, to be honest, I'm going to put back on the table, guys, with what I'm seeing right now. Time base high from March 27th, okay? Because it just looks very apparent to me, because the only run that we did create failed to continue past that first target. Instead, it closed with a strong body, created the change of state on the higher time frame here above this down candle, right? And it's really displacing with great strength towards that time-based key high. And again, my eyes are definitely rested back up on time-based key high. All right, so I'll give this entry, I'll give this an A rating. Okay, multiple gaps, utilizing the model 2 down candle. I would take this with modest risk. Okay, and again, target would be that time-based buy side from March 27th. All right, so now that you saw the live recording of me saying all this live, I can now confidently review this to you guys without, it just being hindsight, right? So really what I'm going to dive into here is exactly what I saw from whatever we retrace here, number one, and number two, why I thought this was such a key level in the market. So number one, in and of itself, okay, this is a time-based key high because it's an old New York session high. So as you see, this was from March 27th, and here was 9:30 opening candle right here. If you just zoom in, that was right here. Here was its high, left behind and left untouched. Old opening range highs are going to work as magnets, time-based key highs. Simple enough. So that's number one. Number two, if you actually zoom out, okay, you're going to see two things. Number one, with that time-based high, we also had this really key daily inefficiency resting above as well. So if you have a gap and a really key type of time-based or daily high above you, that combination right there makes the draw very strong. Now, if that wasn't enough, we have a third layer here of this really inefficient volume imbalance resting above us here on the weekly chart. So we have multiple inefficiencies across multiple time frames with an untapped, very key high in the market opposing, okay? So with all that in mind, I wasn't completely sure we'd have the strength to continue higher because, again, we've been overall primarily bearish. However, that all changed when we did this right here. Okay, so now this level is significant because this is your 9:30 opening price. So we actually came down, swept out those opening range lows, and delivered below the 9:30 opening. Now, admittedly, I did think we'd go down a little bit further and bump out this trend line, but we just did not have the weakness to do that. Instead, we just kept on going. All right. So here was my thought process live time. I wasn't yet convinced on longs whenever we created this initial rally, right? Like typically this is going to be your best, strongest Model 3. But the reality is I wasn't 100% convicted yet until we got very key signatures in the market. So that came from this down candle, its opening price. So this candle that took us below the 9:30 opening price, where actively smart money is reaccumulating longs if it's a bullish market, we changed our stage delivery with great strength above that opening price. Okay, that's number one. Number two, if you take a look at this bad boy right here, okay, this was an old yesterday, Monday, time-based gap from 9:30. That's when it was created, right at 9:30. You extend that to the right side of the chart. And as you can see, as we're simultaneously creating that change of state delivery, we closed at the low, so we're respecting key levels, and then rising up above it, again, closing above, in the direction of that really obvious draw that I showed you guys with the inefficiencies and this time-based high. So that was really key. All right. Next, we just had a really high volume light bulb expansions towards this previous hour high here, right? So we created multiple gaps here, another multiple gap phenomenon. If that wasn't enough, then we started creating classic bullish order flow 101. Okay. So I want you to take a look at this. Okay, this is order flow physically that you can see on the chart in 4K, right? So you look at opposing up candles. If it's going to shift the tide and prove itself to me for bullish order flow, it's going to close above those opposing up candles. So as you can see, we closed above that opposing up candle and then created this retrace. That was super key because we're now blasting and disrespecting opposing order flow. And then we change our state and delivery right after that above these down candles. In a bullish market, down candles being respected is exactly what you want to see. Once we solidify this order flow, I got my backed by data systematic entry in the market. Now, is this like the most ideal long in the world? No, it would have been nicer to get the lower long there, but I didn't have the confirmation that I did here, right? I was a lot more comfortable. So what did I do? I got into the market. I put in a 58 point stop or 63 point stop loss, excuse me, entered at these fair value gaps here. So if you zoom in, you'll see there's one gap right there. Okay. Second gap right there. So my logic is, okay, I'm going to enter long here and I'm going to have my stop loss cover 3 key levels. Number one, this gap, and then these series of down candles here. So my logic was, okay, if it's truly a bullish market, we should not body below these down candles. Now, here's where I went wrong. And I wouldn't even really say a wrong thing. It's just kind of life getting in the way. I took this long position. I take my loss to the chin and I just, whatever, I hop off, right? I'm not going to try and impose my will. I'm not going to try and force it. And I told myself, you know what? Let me just recalibrate myself. Let me take a deep breath and let me come back for 1 p.m. Typically, this works in my favor and keeps me from revenge trading. Today, though, it kind of bit me in the ass and, NASDAQ gave me a nice little kick to the nuts. And let me explain. Here's when things go wild. I allow myself a second bullet always because a good amount of times I'm going to need to use my second bullet because maybe I won't be right on the first try. But on the second try, 90% of the time it hits on the second try. I don't. If I need to use more than 2 bullets or 2 attempts, I'm just simply not in sync with the markets and I got to hop off. Okay. Here was a textbook phenomenon in the market yet again where it actually offered me a second opportunity. Okay, here was your 12 o'clock classic hourly candle opening. And then following that opening price, here was your light bulb expansion, creating 3 fair value gaps in the direction of that draw on liquidity that I did call out. Okay, so we have hourly PO3 going on, accumulation of orders, consolidation, manipulation, while still respecting that time-based gap that I mentioned from the 15-minute chart. See this tan shaded area? And then boom. Huge light bulb expansion, time-based, very key, expansion in the direction of time-based draw. This right here would have been a valid re-entry. Where would my entry be? Right here. Stop loss would have had to cover the low. Obviously, target where I called. The problem was, though, I wasn't on the charts. I said I was going to come back at 1 p.m. Again, a lot of times that works well. But instead, I was outside, actually on a bike ride with my daughter. So I'll drop a picture for you guys right here. And that was pretty much it, man. Sometimes life just doesn't call for it. Would I have taken a second attempt if I was on the charts? Absolutely, because it's this textbook. But yeah, guys, that is how I lost, not $100,000. This is how I lost 200 and some change dollars here today, okay? Now, again, here was my P&L that I showed in the beginning of the video. What you're going to notice is how the losers are much, much smaller and less significant than the winners, right? So the real key to trading is not being right every single time. The key to trading is, okay, how can I minimize my losers? Meaning, like, don't revenge trade, don't take low quality trades, don't make the bleeding worse. Just take your loss to the chin and wait for the next high quality opportunity, like for example here. That's number one. Number two is, okay, how can I also, while I do that, maximize my winners and milk them out as much as possible? Well, there's many ways you can do that. I'm not going to get into all that here because I don't want to keep this video on forever, but there's many, many ways you can milk out winners, right? And really make them count. And obviously you can see that here. Okay, so trading is an imperfect game. I know everyone on Twitter and wherever else has 100% strike rate. They're always winning and they're always showing these beautiful calendars, but really not showing the reality behind the scenes. But another discussion for another time. But the point is, it's not a perfect journey. You don't have to be perfect. You're going to get it wrong sometimes. Sometimes you're going to miss your entries. Sometimes, whatever, life gets in the way. Stuff happens, okay? What your job is just to take advantage of the oncoming opportunities, right? And the ones that are ahead, okay? Because there's going to be infinite opportunities in the market. I understand that. You need to understand that. Stay prepared, stay focused. I hope you guys learned something from this. Peace.